S&P Utilities Index is up almost 15% this year, making it the best performer in 2011. Our next guest says that is just because everything else looked fairly ugly. Joining me now from our Bloomberg headquarters in New York is Ray Moore of Wellington Shields. Ray, good morning to you, and thank you for joining us.
Good morning.
So you say utilities did well also because they are in a cost-plus industry. Can you explain what that means?
Well, look at, as far as last year, a lot of good things happened. One, they had income, and income was a scarce commodity. Two, they were domestic, which is also important. Three, they had income with growth in that income through dividend increases. And four, they basically had the protection of regulation. The companies that tended to do very, very well last year were basically the high quality, considered well-run companies with the protection of regulation. I think of the Southern companies, Dominion Resources, Duke Energy. Well, now when I'm looking at it from a brand new year coming out, well, it's really tough to match that type of performance again. Second of all, the economy is supposed to be stronger. With a stronger economy, traditionally tells you defensive stocks underperform with a stronger economy. The other thing is that when you look at the fundamentals from the utility standpoint, is that they are in cost plus. And what I mean by that is with the increased EPA restrictions and new requirements coming on, is that a significant amount of their outlays over the next several years are going to be in non-revenue producing investments. Non-revenue producing, I mean, just regulation. You're not putting in a generating plant that's going to create additional revenue. And so that leads you, then you have to go back to Big Brother. You have to go back to the regulators. And in the cost-plus environment, you tend to under-earn. You're always playing catch-up. So I basically am looking for a somewhat stronger economy and some of these names that have done well-run companies, but I basically think they're fully priced currently.
Now, we also have an election year coming up. You talk about regulation. Is increased regulation going to be something that kind of hangs over the sector?
That's a given in utility world. They're always concerned about the regulation. But we also do have in Congress, we have some questions about the tax advantages given in wind and solar energy. You know, that's something that's being discussed by Congress now.
What pockets within utilities, though, could look on the better side in 2012?
Okay, a couple of things. It's a, you know, very often it's the stocks that do well in year one do poorly in year two, and vice versa. One of the companies that I think that I'm interested in now is because when I look at the economy and I look at the price of natural gas, all forecasts say that natural gas prices are not going to, they're going to be depressed for the foreseeable future. And, you know, I've never seen that work out in my career. So I'm looking at a company, for example, like Exelon. That's admittedly it's going to have a couple of tough years in the next 2 or 3 years, but it has a safe dividend and a yield. And, you know, if the price of energy or the price of natural gas begins to rebound, you would see it reflected fairly quickly in the price of those shares. So it's a call on natural gas with a minimum downside.
We'll look potentially for a rebound there in natural gas prices. The thing I want to ask you about, though, is dividends, because everyone comes back to this idea that you want safety in this kind of market, and utilities offer that payout as you wait, right? Utilities have a dividend yield of 4.1%, lower than telecoms at 5.3%, but you have a lot more stocks to choose from. Do they have room to increase their dividends? Is that something that they're being pressured to do?
Well, the quality names and the ones that have done, yes, they do. The payout ratio is only about 60% currently. And one of the things, and when you mention the utilities, the electrics, and the telecoms, is I call it an ability to cheat. You have a high predictability in many of these companies that increase the dividends. So that's one of the big attractions.
All right. Thank you so much. Raymond Moore joining us. He's an analyst at Wellington Shields, talking about how utilities may not be the best play next year.